Market moving headlines are a daily occurrence, but that's not the biggest indicator of when the next big market crash could happen. Here to share more about how he makes his market predictions is Marc Chaikin. He's the founder and CEO of Chaikin Analytics. Mark, you have been doing this for a very long time.
I have, Bridget, and I have to tell you that most people don't pay attention to what really matters in the stock market. They're influenced by the headlines, as you point out, and because of that, they miss the bigger picture. Other people make the mistake of looking at the economy or the Fed to figure out what the bigger picture is. We have a roadmap that's worked for me for my 50-year career on Wall Street, and it's now working for our subscribers. So I'd love to share a little bit of that with you today.
Yeah, we are very much excited to dive into your strategy that's been proven and tested over time. I think I want to start a little bit with what some people are saying right now, that what's happening in the US right now is unique. This is one of those market moving, market changing times where there's so much unpredictability. This is different than times before, but I'm sure you've maybe heard that in the past too.
The four most dangerous words in the stock market are this time it will be different. Whatever you're seeing out there in terms of chaos, tariff uncertainty, the Fed reacting to inflation and so forth, those headlines repeat themselves over and over again, year in and year out. Nothing is really new in the world except for AI. What has helped me and helped our subscribers is something that we call the election cycle. And this is a proven cycle. I didn't create it, but the smartest people on Wall Street use it. And it was actually identified by a guy named Yale Hirsch, who founded the Stock Market Almanac, a yearly publication way back in the late 60s. He determined that each year of the presidential cycle, meaning the election year, the post-election year, which we're in now, the midterm election year, and then the pre-election year, each of those years has a very significantly different footprint, if you will. And if you let that be your guide and then bring a little bit of technical analysis and common sense into the mix, you have a pretty good roadmap for what's likely to happen.
Yeah, such a good roadmap that you have an exact date picked out of when you think the next stock market crash could happen.
The date is something that's based on an average of all the midterm election years, which is typically when you get some churn and bear markets in stocks. And typically, let's back up a bit. Year one of the cycle is a bullish year for stocks. So if you're seeing in the headlines that stocks are poised to break down, that's something you shouldn't be paying attention to. 2025, first year of the election cycle, similar to 2021, similar to 2017, similar to 2013, similar to 2009. These were bullish years for the stock market. But where we run into trouble is in the second year of the presidential term, and that's 2026. And we think that there's going to be a market top in the first quarter, late in the first quarter, maybe in the second quarter of 2026. And we've zeroed in on mid-March of 2026 as the likely time when the stock market will peak and perhaps head down into a first significant correction in over 2.5 years.
And that is a very specific timeline. Looking at the data itself, Mark, how confident do you feel in this cycle and the data that you've seen in years past kind of replicating again right where we are right now?
I'm highly confident because there are forces at work that can help explain why this happens. So, for instance, a president comes into office. There are things he wants to accomplish. Maybe he wants to, as President Trump is doing, fulfill his campaign promises. Investors get hyped up about the potential for favorable regulatory changes where they roll back some regulations that makes mergers and acquisitions more friendly. It could be tariff or monetary policy that stimulates certain parts of the economy. Then when you get into the second year of the presidential term, reality sets in because some of these changes are fairly dramatic and people are now over the euphoria of having a new president and new initiatives, which does create enthusiasm. And now you're faced with the consequences of what was enacted or initiated in the first term. So I'm very confident that in 2026, we're likely to see a significant downturn in the market. I think it'll be a bear market with a decline of perhaps 20% in the S&P, but that remains to be seen.
Yes, and you go into great detail into kind of exactly what investors should be doing to prepare their investments for this potential crash in 2026. That's all in your latest report from Chaikin Analytics. We're going to give you that report in the link of this description, and we'll share more about it towards the end of this video. But first, I just want to get to some advice for investors out there. You say 2025 is going to be a strong year, but when it comes to 2026 and this potential turnaround, what are some areas that might get hit the most, some industries that might not be the smartest investments if we do go into a downturn?
Well, I think there are certain elements of the tech sector that have been inflated to very lofty valuations, if you will. If you're a momentum investor and the fundamentals are still good, and how do we measure the fundamentals? With our Chaikin Power Gauge rating, which is a 20-factor quantitative model, you can stay with these stocks through the bull market that is still in progress. In 2021, we got a real advance warning that a top was coming in 2022 from the tech sector. And particularly, I was monitoring Kathy Wood's ARK Innovation Fund, the ARKK, because she had so many speculative stocks in it and still does. So I'll be watching the ARK Innovation Fund and looking for cracks in the price structure there. Right now, it has a bullish rating in our power gauge because we rate ETFs as well. But at some point, just as it did in 2021, I expect that we'll see a bearish rating on that. And that would be a tip-off that the highly overvalued aspects of the tech sector are vulnerable.
Are there any other industries that might get hit the hardest in 2026 that would be good for investors to avoid?
Materials is an area where I expect that there'll be some weakness. Also watching the home builders. Home builders are a key part of the economy. Commodity prices are going through the roof again. And depending on how the trade negotiations with Canada and Mexico work out, price of lumber could go way up, price of copper could go way up. So the cost of building a house is going to go up. I would expect that if we do top out in 2026, that the home builders and all the associated companies that supply that industry are going to be vulnerable.
We've heard a lot about energy investing early in 2025 here. Do you think that that's going to continue to be a strong investment for the year, or could we see some changes in that sector as well?
Well, that's an interesting question, Bridget, because in the first Trump term, the expectation was that because of his drill, drill, drill mantra, the energy sector would go up. The reality is the energy sector in 2017 went down. I'm not a big fan of the energy sector right now. I don't think the natural gas companies want to do any more drilling. They'd like to export it, but of course, if you start putting tariffs on, exports become more expensive. I'm not a big fan of energy right now because our power gauge rating is not bullish on the energy sector.
Very interesting to hear your take on the energy sector, Mark. Some investors are excited about the potential of nuclear energy. If you're interested in learning more about investing here, check out our latest free premium report on MarketBeat.com on 7 nuclear energy stocks that could have a big 2025. You can scan the QR code or click the link in the description of this video to get that free report on MarketBeat.com. Well, Mark, thank you so much for sharing some insights on which sectors could be bullish this year for 2025 and what to expect with that potential downturn coming in 2026. You gave us just kind of a glimpse of some of the research that you've done with your latest report. Tell people a little bit more about what they can expect in your full report.
We have outlined a strategy of how to pick the biggest winners leading into what we think is going to be a top in 2026. And the way we do that is by looking at the power gauge. Right now, the strongest sectors are financials, consumer discretionary, particularly some of the restaurant and travel companies, and technology. So in our report, and there's a whole series of reports that people get, but first they have to watch a video where we go into all this in detail and how to really find the winning stocks, and more importantly, how to avoid the losers. A big part of our investment philosophy is ride your winners, but identify the stocks that you want to sell and the stocks that you have to avoid because they have the biggest risk on the downside.
Well, some great information, Mark. Thank you so much for your time today. And if you want to learn more about his latest report and watch more information in his video, we have that linked here in the description. You can also scan the QR code on your screen right now, too. Mark, thanks again for your time. And thank you for watching, everyone. As always, happy investing.